Sarah, Alphabet reporting earnings per share here of $12.77. Not immediately clear whether that compares to the $10.82 the street was looking for. On the top line, though, $39.28 billion. Remember, the street was looking for $38.9 billion. Just quickly looking through the segments here, guys. Google Properties revenues, $27 billion in the quarter. Google Ad revenues, $32.6 billion. Google Other revenue coming in at $6.5 billion. Other Bets revenue, $154 million. It looks like Other Bets operating loss, $1.3 billion. Total TAC in the quarter, $7.4 billion. And total TAC as a percentage of Google Ad revenues at 23%. Finally, paid clicks on Google Properties. That looks like it's up 66% year over year. Cost per click down 29%. Guys, back to you.
Shares lower by about 2% after hours. Mike, what stands out? The revenue was pretty much on target.
Yeah, it seemed like in a broad sweep it was roughly on target. So I'm not seeing anything that would really cause the market alarm. Obviously, it's a marginal move here. The stock is, still like 12% below its all-time high, but it's rallied up into this number.
I guess the revenue as well that a lot of people look at, X the traffic acquisition cost, is also slightly ahead of expectations.
Right.
So it doesn't really talk to this pullback in the shares after the result. The EPS on the surface, as Josh said, looks ahead. So we'll continue to dig into that. Kathy, in terms of the valuation of this particular company, is this one of those ones that you think will definitely grow into its premium valuation?
If they are successful with Waymo, and they're going through growing pains right now, and I think that's why Other Bets are disappointing, one of the reasons. If they are successful with Waymo, that's a huge call option. We think it should be worth $2 trillion today. I know some analysts have it valued at $170 billion, but for the entire market. So if they're successful there, this is a huge call option for that. There's another thing that Google has. It's really the #1 AI company. We were just talking last week about AlphaStar. Their latest chip was able to beat one of the top gamers in StarCraft 2. This is occurring 18 months after the AlphaGo victory. Most people thought this wouldn't happen for 10 years. That's how far ahead they are in pushing AI, and that's why we think autonomous vehicles are closer than most people think.
It's interesting that part of your bull case this year is Waymo, because I think of you as the greatest Tesla bull. Who thinks Tesla's in the stratosphere? These are competitors, right, in this race.
No, they're probably the two leaders in this space. The losers are almost everyone else, we think. Cruise automation may have a bit of a play, which is part of GM. No. We think Tesla's way ahead of Waymo and way ahead of the game. There's no comparison from our point of view.
Mike, in terms of these other areas like Waymo, I guess they're using up a lot of cash at the moment. That's something that most of the analyst notes say they need to hear more about on the earnings call. Yes, there's the cash cow of the advertising business, but how much longer is this going to hit margins going forward?
We're at a point where I do think it's obvious for the company to get those questions, but they've never really signaled that they were going to enter this sort of capital return mode or anything like that. They're trying a little more clarity on that part of the business. So maybe they'll be under pressure, but I don't think the valuation's being punished particularly for it right now. So maybe that's what would have to happen for that story to change right now.
It's so interesting on Alphabet how loved it is. 98% of analysts say buy, which is actually the most it's been, I think, in a while. It's always up there.
Sure.
It's always a beloved stock. But if you look over the last 12 months, it's really gone nowhere.
Yeah, it's been relatively range bound. What's amazing, though, is for a company this size and already that much dominance to have these growth rates. So you could say it's already built into the valuation. What's interesting to me is the dynamic between Google-Facebook valuation, because Google started to trade up at a premium, and then Facebook rallied a little bit. It's come in a little bit. Google has come in valuation relative to Facebook, but it's still above the longer-term average.
I also think what Google just did is validate what happened to Facebook. The advertising dollars moving off of TV into digital are benefiting all these guys.